Time now for our weekly market segment, and our analyst will be here in just a second. The weather is a big driver for this market. We'll take a look at that. Higher corn prices mean higher feed costs. Are there any corn substitutes you can consider? And what does the latest cattle on feed report tell us? We'll check the numbers. Dr. Josh Maples is our guest this week. He's an assistant professor and livestock extension economist with Mississippi State University. Josh, thanks for being here.
Absolutely, happy to join you.
And let's look at that cattle on feed report to start off. Anything surprise you with those numbers?
There really weren't a lot of surprises in this particular report. You look at the total number is the one that got the headlines, 11.7 million head of cattle on feed. This is up about 1.5% above year-ago levels. But again, that was pretty well anticipated. The placements number was down a little bit. We were thinking that was going to happen coming into this report. It's not really a story about lower placements more than a story about larger placements in March and April. And then that May of 2018 number that we're comparing this year to was a really big number. So that 3% decline in placements really tells us more about what we're comparing to than this year in particular. Marketings were up about 1%, so we needed that boost. That was well anticipated, but it was a nice boost, and we hope to see that continue in the coming months. But overall, the report was not a big market mover, not a big surprise to what traders were expecting.
Could you give us an update on what we're seeing when it comes to corn prices? Because that's playing a big role when it comes to feed costs.
Yeah, absolutely. We are in a corn market for sure, and specifically it's a weather market. So if you look at what corn prices have done really since the first week or two of May, we've seen 70, 80 cent bump in December futures. There's just a whole lot of uncertainty about how much corn farmers are actually going to produce this year, and weather is dominating all of this. And so this is, kind of spilling over into cattle markets. There's a very clear link between higher corn prices and lower cattle prices, or at least feeder cattle prices, because the cost of gain goes up. And so we're in a situation where there's a lot of uncertainty in the corn markets that's spilling over into our cattle markets, and it's really put a lot of uncertainty into what our cattle prices are doing. We've seen cattle prices drop significantly the last 6 weeks. Some of that seasonality, but a big part of that is just this uncertainty about what corn prices are going to do.
And I've read where some folks are even suggesting feed substitutes could be an option. Any recommendations on that? Yeah,
so that's absolutely true this year. Anytime you see a primary ingredient price go up like corn is for cattle producers, you're going to see producers look to other options. And a lot of that's going to be regional, Troy. It's going to depend on what kind of feedstuffs are available in your area. And so we're going to see producers start looking to maybe some surplus items around them or some surplus feedstuffs around them to try to substitute for corn. And really the big one this year is just going to be grazing, though. Pasture conditions are phenomenal, generally speaking. We've had really wet spring, and it's led to really green grass throughout most of the country. So I think we're in a situation where we're going to see a lot of producers look at what calf prices are, look at what cattle prices are in general, and say, I've still got a lot of good pasture out here. I think I'll just keep them on pasture a little bit longer. And so I think that's going to be the biggest substitute, is we're going to see calves stay out on pasture longer this year, and probably lead to some heavier placement weights into the feedlot down the road.
What would be the pros and cons of selling the animals at a lower weight?
Yes, that's certainly an option. You can sell them at a lower weight so that you don't have to tack on the gain to them using a higher cost feed. Higher cost feed if corn is a primary ingredient. The big con to that is that the person who would potentially buy that animal from you is also thinking the same thing. And so those calf prices are getting pushed down significantly because the next person along who might take on that animal and add weight to them is thinking, hey, I'm also going to have to take on these higher costs. So the con is that prices are are going to be really low for that animal, especially for the mid-weight feeders, looking at trying to add weight to those animals. And that's, again, a reason I think we're going to see a lot of cattle spend more time out on pasture for as long as we have these good pasture conditions.
And Josh, before we let you go, anything on the marketing front or risk management side that we haven't talked about that you'd like to mention for us today?
So risk management is a hot topic right now. You know, unfortunately on the cattle side, there's not a lot of clear wins in terms of what you should do for risk management. And that's primarily because prices have already been beat down so far over the last few weeks. There's not a lot of prices too far out in the future that you're going to look at and say, yeah, I want to lock that in. Really, the risk management side is on the input side. So if your production, especially for feedlots that are heavily dependent on corn, you know, really now and the past few weeks have been the time to look at where corn prices are and where your potential future feed costs are, and think about trying to lock something in if it makes sense for you. We've got the acreage report coming up next week, the USDA acreage report. This is going to shed a lot of light on corn production, so that has the big potential to be a market mover. So risk management, you know, either before or after then is going to be a big topic.
All right, Dr. Josh Maples from Mississippi State University. Always a pleasure catching up with you. We'll do it again soon.
Thanks, Troy. Good catching up with you.
Sticking with the topic of cattle and meat, and alternative meat or fake meat is something catching the attention of producers. Now, fake meat can be plant-based, where pea protein is the primary ingredient, or it can be lab-grown, where it's produced from the cells of an animal. And even though some may deem the meat to be fake, the money it's generating is very real. I was recently joined by Nebraska Cattlemen Executive Vice President Pete McClymont to learn how producers are responding.
Obviously, we've seen in 2000 when the dairy industry tried to petition FDA to protect their nomenclature, milk and milk products, as we saw others like almond milk essentially steal, if you will, that terminology to promote their product. They petitioned FDA. FDA stood silent, and it wasn't until 2018 FDA admitted they made a mistake, and so we as a state association as well as nationally with NCBA are working very hard and vigorously with FDA and USDA to define who can have the control on those names and titles. And so we're hopeful. It's off to a decent start, but we're going to make sure we're engaged, because producers don't need to have the things that are near and dear to them, the simple terms that define our products, being stolen by people that want to threaten our industry.
A story we'll continue to track here on Market Journal.